For more on the AI trade in the markets overall, let's bring in Kwon. He is the new-ish chief equity strategist at Wells Fargo, and he is out with his first ever earnings preview note in that role and is kind enough to come on Fast Money. Are you sure this is where you want to start?
I mean, that's right. Congratulations.
Thank you. On the new rule. So I guess the debate, this bubble or not, whatever's happening, your models, you run through all these thousands of models all the time. Your models show that earnings may actually be better than many think. Why?
Yeah, so we're forecasting about a 4% beat for the upcoming earnings season. So we came up with a pretty interesting model. We essentially looked through all the macro variables that we could find, about 350 macro variables. And we went through this machine learning process to figure out where the sales could be. And it's still pointing to a pretty decent beat. So we're forecasting about a 4% beat led by AI, semis. So
is it a big enough and broad enough beat to justify the rally that we've been seeing the last few months?
I think so. I mean, people say the bar is a little too high this time because EPS didn't get cut into earnings as it usually does. But if you look at where consensus number is for Q3, it's down about 4% since the Liberation Day. Our view is that tariffs didn't really have much impact in Q3. I think it's more of a Q4 event and into Q1 because companies carry about 65 days of inventory at the end of Q2, which means that since August 7th, their pre-tariff inventories are going to run out in the middle of October to November. That's not Q3. That's really Q4. So I don't think we have yet to see the real impact of tariffs yet. And if that's the case, I think earnings are going to come in around the Liberation Day.